Hello and welcome to this week's episode of Focus On with myself, Fifi Peters. Today, we're coming to you from Dallas, Texas, which is home to the 16th US-Africa Business Summit, a summit that aims to strengthen commercial ties between companies in Africa and the US. In this week's episode, we're looking at the infrastructure financing opportunity. We'll be speaking with the CEO of Africa 50, Mr. Alain Ebubise, about why infrastructure is an attractive investment class for foreign investors. I know that you want to talk about infrastructure, which is a conversation that you can't not talk about, of course, when you're having or doing business on the African continent. You want to talk about why infrastructure is an attractive investment and an attractive asset class that investors should consider. So perhaps flesh out the details thereof.
Well, look, I think infrastructure is a good investment asset class, in my opinion. We have demonstrated in Africa that we can invest in a profitable and high-impact infrastructure project. At Africa 50, which is an African infrastructure investment platform, which is owned by 31 African countries, the African Development Bank, and 2 African central banks. Our role is really to invest and demonstrate that African infrastructure is profitable so that we can catalyze more private investment in infrastructure in Africa. We've invested in power projects on the continent. We've invested in transport, in ICT assets. Recently, we started to invest in social infrastructure. So we have a track record of delivering good returns and also impact. So for me, when I talk to investors, I tell them, come and see what we are doing. We're already demonstrating that African infrastructure is attractive. What we want to do now is to scale up because the needs are huge. So we have a good track record, but we want to do a lot more. I would argue also a lot faster.
And that's the challenge. To your point, when you talk about the attractiveness of the investment class of infrastructure in Africa, my follow-up question to that is, you talk about the attractiveness, you talk about the returns that Africa 50 has been able to deliver, and perhaps others who operate in the space, such as yourself, sir, and yet we continue to have an infrastructure gap on the continent that runs into the billions of dollars each year. Yeah. Why do you reckon it is so hard to close that gap, in your view?
Yeah, well, it's true that the infrastructure financing gap is huge. I mean, just to give a few figures, the International Energy Agency, IEA, has estimated that Africa needs to invest about $130 billion a year to meet our sustainable energy needs and our climate target by 2030. And the African Development Bank is saying only $30 billion a year of climate financing is invested in Africa. So we have a gap of $100 billion a year or more. So it's a big gap, but I see this gap as an opportunity. Now, what needs to be done to bridge that gap? I think a few things. Government should continue to create a conducive environment to attract investment in the infrastructure space. And I think there's a consensus today among almost all African countries to try to do some work to attract private capital. Now, some of the countries are more advanced than others, but I think everybody is trying to do what they can to attract more money. One of the things, in my opinion, that will be a game changer is that we should focus a lot more on building the pipeline of bankable projects, to invest in early stage risk capital and project development resources to build up the pipeline of bankable projects that investors will then be willing to come and invest in. This is what Africa 50 is doing. With our limited means, we are doing this work. We're also scaling up into this early stage project development work. So I think, for me, a lot of people have to spend a bit more time building the pipeline of bankable projects so that the investors will fund those projects and therefore reduce the gap. We won't be able to achieve our target if we don't have enough pipeline of bankable projects that will receive the investment from investors.
You talk about government needing to help yourselves in the work that you are doing right now in trying to plug the gap. You're trying to plug the gap by looking at the pipeline of projects that come through, ensuring that they are the kind of projects that investors who are here at a summit like this are willing to put their money in. But then after that, they also look at the environment and they say, is this environment conducive for business, which is a point that you touched on, sir. Reflecting on what the current environment looks like, 2024 in Africa and beyond, what does a conducive business environment in your view look like, sir?
Yeah. Well, look, there are macro challenges globally, including in Africa. Exchange rate volatilities, higher interest rates, so we've seen that. But I will argue that we can still put together deals that are attractive for investors by offering reasonable returns on equity, by raising debt to fund those deals. I think that for us infrastructure investors, they have to take a longer-term view that they will see that countries will go through different cycles. And for us, when we talk to pension funds, for example, we make sure that we can give them a medium to long-term perspective that they will make a decent return on their investments and also produce impact. One of the things that we are doing is to really put a lot more effort into mobilizing institutional investors' capital from Africa to fund Africa infrastructure, alongside global investors' capital that we also need to bridge the gap. But it's very important for us in terms of building the confidence that we mobilize funds from Africa for Africa investment in infrastructure. That's why I'm very pleased, for example, that today at this conference, the US Africa Business Forum Summit, we had institutions such as the Nigerian Sovereign Investment Authority, NSIA, the Sovereign Wealth Funds of Nigeria. We had the Sovereign Wealth Funds of Angola, Fondo Soberano. These are institutions which are working with us, Africa 50, to try to invest in infrastructure in Africa and showcase to the US investors that we Africans, we believe in our own asset and we want them to work with us to scale up.
Which is important. You can't ask your neighbor to do what you're not willing to do yourself, essentially. And I like that you mentioned the funds of pension funds specifically. A lot of people look at it as the specific funding pool for infrastructure projects, long-term nature projects, and given the fact that pension funds themselves are patient the capital, as it were. In South Africa, what we have seen is a number of interventions from the government, particularly on the regulation side, to try and free up more pension money into infrastructure projects that you talk of, sir. You spoke about the local interest and also the global interest amongst institutions. Is it growing in your view? And I suppose more importantly, how can it be accelerated?
Well, it's not growing fast enough, but I see that things are changing. I'll tell you something. At Africa 50, we recently closed the Africa 50 Infrastructure Acceleration Fund. This is a $500 million fund focused on infrastructure. For the first close, we managed to bring together 16 African institutional investors, pension funds, sovereign wealth funds, and those investors are backing our fund, IEF, Infrastructure Acceleration Fund. It's the first time historically that we were able to bring together so many African institutional investors to invest in a Pan-African infrastructure fund. So it's a good start. The amount of money is not huge, but it's the mindset change. Now, I should tell you, according to the African Development Bank, there is about $2.1 trillion of asset under management by institutional investors in Africa. If just a tiny amount, a tiny percentage of this huge sum was invested in African infrastructure, we can make a big difference. So this is the kind of work that we are doing. Not only do we come here in the US to engage with US institutional investors, we also do that in Africa. Africa has to take the leadership of African affairs. Africa has to invest in Africa while we are also seeking support, co-investment opportunities with global players. And this is what we're doing at Africa 50.
Sure. So in closing, the patient capital, good returns, prospects, but we cannot talk about the risk, particularly when we're talking about long-term financing. And that risk looks different depending on what kind of glasses you're wearing and who is looking through those glasses. The dominant conversations have that risk saying it's overpriced, but we've got the ratings agencies to blame, or whoever to blame, as to the fact that the risk is not accurate for actually doing business in Africa. You look at another lens, and it also talks about the problem with the long-term projects in Africa is that you've got a deterioration of governments in some parts of the continent. You wake up in some parts of the continent, you've got a certain individual who is leading. You sleep, it's someone else there. So it depends on how you measure the risk. As Africa 50, and more importantly, your message to investors and foreign investors who are here, sir, about the risk landscape in Africa, it looks like what?
Well, what I will say is that, there are risks and opportunities in all regions. We in Africa, we have to acknowledge our challenges, but we also say that we can put together bankable structures, and including working with developing financial institutions such as the African Development Bank, which is one of our important shareholders at Africa 50, which can offer risk mitigation instruments to cover some of the political and regulatory risk that the private sector is not willing to take. So that's one angle, offering political risk mitigation instrument to reduce the risk, to de-risk those assets. Because at the end of the day, I think the perception of risk for Africa is higher than the reality. The president of the African Development Bank, Dr. Kiwumi Adesina, who is also the chairman of Africa 50, likes to talk about these statistics from Moody's that have looked at the default rate of infrastructure loans globally. And Africa stood very, very well. I think it was the number 2 in terms of the lowest risk compared to other regions that are perceived to be lower risk, but in fact they're higher risk when it comes to the default rate. We have to talk about those statistics. We have to show to folks that the actual risk is lower than the perceived risk. But we have to work to try to reduce even the perceived risk by demonstrating the track record of institutions such as Africa 50 and others, by showing folks that our portfolio is of a good quality, we make good return and good impact, and hopefully that story will permeate. But we also have to work with institutions such as CNBC so that we can tell our story. We can tell what is happening on the ground, and folks will see that they can actually come and make money and make impact, and that will be what will attract them. They're not going to come because they want to help us. Sure. People are coming because they want to make an investment, and that's fine. There's nothing wrong with making money as long as you're delivering good services, and this is what it's all about.
Sure. And that wraps up this week's episode of Focus On. Trust that you enjoyed it. Until next time, it's goodbye.